let's head out to D.C. That's where we find our Michael McKee, of course, Bloomberg TV and radio economics and policy correspondent. They're going through the Beige book. Mike, what's jumping out for you?
Well, this is a much more downbeat Beige book than we have seen in recent months. The Fed finding, as expected, that a lot of companies are concerned about what's going to be happening with the economy. Economic activity, little changed, the Beige book says, but uncertainty around international trade policy was pervasive across reports. Just 5 districts saw slight growth. 3 said activity was unchanged, and the remaining 4 reported slight to modest declines. Auto sales were robust, but non-auto consumer spending was lower overall. Both business and leisure travel were down on balance, and several districts noted a decline in international visitors. So the Beige book anecdotal reports kind of matching up with what we have heard in earnings reports and others. Manufacturing mixed, they say. Energy, modest growth. Agricultural conditions, fairly stable. Now, in terms of labor markets, they were essentially little changed, according to the Beige book. 4 reporting a slight increase, 4 reporting no change, 3 reporting a slight decrease. But hiring, they say, generally slower for consumer-facing firms than business-to-business, and a big decline was noticed in government roles, or roles at organizations receiving government funding. That'll be no surprise. Several districts reported firms taking a wait-and-see approach to employment, pausing or slowing hiring until there's more clarity on economic conditions. And there are some scattered reports of firms preparing for layoffs. Prices were up. Most districts noted that firms expected elevated input costs resulting from tariffs, and they have received notices from suppliers that costs would be increasing. They report adding tariff surcharges or shortening pricing horizons to account for uncertain trade policy, and they expect to pass through tariffs to consumers. So the Beige book basically telling us what economists have forecast, that people are hunkering down and getting ready for a negative shock to the economy if it indeed comes through.
Yeah, I thought it was interesting, Mike, you noted auto sales, most districts seeing moderate to robust sales of vehicles, generally attributed to a rush to purchase ahead of tariff-related price increases. It's something that we've covered quite a bit on our program. Bloomberg News has written about that, people going out and buying cars ahead of those price increases that are expected as a result of these tariffs. The question I have is, how does this then inform the May 6th to 7th meeting of the FOMC?
It's not going to change anything, because these are basically reports that people are getting ready for a bad economic environment, but it doesn't mean they've taken the steps to do so. Sort of backs up what we've seen with the Conference Board and University of Michigan sentiment indexes, and what the purchasing managers indexes are telling us, that companies are nervous and consumers are nervous. But the Fed's going to want to see some hard evidence that the economy is slowing down, because at the same time, the Beige book notes prices are going up, and that could be inflationary. So I don't think it makes a bit of difference to the May 7th meeting. They are going to be on hold until they have hard evidence one way or another.
Yeah, it doesn't look like we're seeing too much in terms of market reaction off of these numbers. All right, Mike, so what do we do with this stuff against the backdrop of headlines? You're in D.C. As you know, we are laser focused on everything that comes out of the White House, in particular when it comes to trade, tariffs, U.S., China, and then maybe what the president may or may not said about Fed Chair Jay Powell's tenure. So roll it all up for us.
I think basically, Carol, what you have to do is, if you can, avoid all the headlines. But if you've got to make a decision, if you're a business leader, you're going to have to watch all the headlines, because they change on a minute-by-minute basis. Today, we're talking soft on China, although the president says he's not ready to cut their tariff levels yet. But Scott Bessent, the Treasury Secretary, says it's going to be 2 or 3 years before they can reach an agreement. So what do you do? Do you go ahead with plans to expand, or do you go ahead with plans to pass along price increases? You just have to watch on a day-to-day basis and sort of take it as it comes. And when that happens, what do people do? They sit on their hands.
And then we talk to Mike McKee and get the analysis of what exactly is going on. Hey, Mike, before we let you go, we just want to get your thoughts on what we heard yesterday from the president, the ongoing commentary from him about the Fed and about Chair Powell's strategy and role. What's the right way to think about what's going on here? We certainly see the market reaction.
Well, I think that's the right way to think about it. If you look on the Bloomberg, if you have a Bloomberg, call up the GIP for the S&P 500 on Monday, and you can see the big tumble that it took. And I'm sure that's what Scott Bessent and his colleagues did. They went into the Oval Office and showed that to the president and said, if you don't shut up about this, this is going to keep happening. And people tend to think of the stock market as the economy, so it would bring consumers down a lot more and scare them a lot more and likely lead them to cut back on spending. So the president maybe learned his lesson. The problem is whenever you hear him say things like this, it reminds you of the old Simpsons cartoon. I haven't fired the Fed chairman yet. He could come back.
Well,
It always goes back to The Simpsons, Carol.
Doesn't so much.
It always does.
Yeah, there's a couple of things, right? It just goes back to. I am curious, though. Treasury Secretary Bessent gave a keynote, right, and answered some questions in Washington earlier today. And then he spoke to reporters after that keynote. And he demurred, that was the word Bloomberg used, when he was asked if President Trump firing Jay Powell is ruled out. The doubt remains. I guess, how do you, Mike, think about, are we going to see constant nagging and criticism potentially from President Trump as we go on here, and that is going to be constantly the backdrop, like to kind of undermine him? And what problems does that create for Fed Chair Jay Powell?
I'll give you a best case theory here, and that is that the president will continue to criticize the Fed and wish that they would cut rates. He did that last night, even as he said he wasn't going to fire Jay Powell. But he's probably not going to do anything about it other than to jawbone, unless the Supreme Court, in one of those cases we've talked about this week, rules that it is fine to fire the Fed chair.
Yeah.
And then it's legal, and Trump could do it, and that might tempt him to. But for right now, it is probably sidelined, but the tweets will not be silenced.
All right, so then just to push one further, one final question, 30 seconds here, Mike. So what is the impact, though, if President Trump continues to question Jay Powell's moves and undermine him? What's the cost of that?
There isn't really much of a cost. This is the kind of thing that Fed officials go through, whether it's from a president or members of Congress, all the time. Criticism of their monetary policy, and I've talked to several of them, and they all kind of say the same thing. We just let it go over our heads. We're going to put our heads down and do what the economy needs, not what the politicians want.
All right, so appreciate it, Mike, as always. Michael McKee, of course, there in D.C. He is Bloomberg TV and radio and Bloomberg News economics and policy correspondent out there. And, of course, the latest on the Fed's Beige book.